So what is bonus depreciation in real estate? Do you want to wipe out your taxable income even if your property's not cash flowing? Bonus depreciation lets you do exactly that, and I'm going to explain how. If you bought real estate recently, then you may be missing out on a massive tax benefit that the IRS allows you to do. This is called bonus depreciation. In this video, I'm going to break down what it is, how to utilize it, and plan strategically around it to maximize your return on investment. So what is bonus depreciation? Bonus depreciation is a tax incentive that allows you to immediately write off a large portion of certain real estate components in the first year of ownership. So what does that mean? Well, many components in a building depreciate much faster, meaning they wear out. The wear and tear is less than 20 years. So that is HVAC, roofs, any aspect of the building will be a different component that has a different depreciation schedule. So rather than just taking the allowable straight line depreciation loss across residential property or commercial property, which is 27 and a half years for residential and 39 years for commercial, you're able to accelerate that depreciation. And as of 2018, the Jobs Act allowed for bonus depreciation to be maximized 100%. So anything that fell into the category of bonus depreciation on a property was able to be accelerated and bonused out that year. That was a huge year for real estate investors, and that benefit continued for a handful of years, and it's been phasing out right now as of 2025. This allowed investors to accelerate losses, generate passive losses, that they could offset their rental income. And many properties don't receive a lot of rental income the first few years of ownership as you're ramping up the cash flow so that you can utilize other passive income or rental income from other real estate activities. That means capital gains that come in from selling real estate. That means rental income from rental property. All these accelerated losses can now offset all of this income coming in and deferring it, not paying it that calendar year and deferring it down the road. This highly accelerates your return on investment rather than paying 20, 25, 38%, depending on your tax bracket or the timing of the revenue or income. That allows you to compound that wealth dramatically faster than if you were being cut out each year by paying taxes on those profits that the IRS allows you to now defer these taxes down the road, and you do not have to pay this tax. What type of real estate qualifies for depreciation? All of it except for land. Whenever you buy a property, you can depreciate the improvements, not the land. Land is not depreciable. It is not a component. There's not buildings. There's nothing on it. Land is land, and that's the way it ages. But buildings age. Water lines, sewer lines, roads, roofs, they all age. These are the components of a piece of real estate that can get depreciated. So that means residential rentals, commercial properties, renovation expenses or improvements you're adding to the property, new construction properties that are turnkey and completed, and value-add properties. Any type of these can be depreciated over time. So how much can you really write off with depreciation? So let's break down the scenario. You buy a commercial building for $1 million. Now, you do the straight line method of depreciation. So you will be dividing up the building improvements by 39 years. So the average depreciation expense is anywhere between $25,000 and $30,000 a year. Now with bonus depreciation, depending on the year that you do this in and what the tax law is at the time, the bonus depreciation could be $150,000 to $300,000 of depreciation in the first year. It's a significant difference, and you're allowed to choose what method you use. Now, the way that you get the bonus depreciation is hiring a cost segregation engineer. They're going to come in and generate a cost segregation report. They're going to give you a schedule of how much depreciation can you utilize year after year owning the property. And normally they're going to accelerate it in the first 5 years of owning the property because that's where the benefits are for many of the components of the building. And remember, if you get $250,000 of depreciation your first year, you don't have to use it all. And if you don't have any other rental income or passive income from real estate coming in to offset, you don't lose it. It carries forward to the next year. And if you don't use it that year, it carries forward the next year. And when you eventually sell the property, then you can offset some of the capital gains that you receive, or you didn't need to utilize that depreciation upon the sale. So here's the current bonus depreciation schedule as of 2023 phasing out to 2027. In 2022, you were able to bonus depreciation 100% of all bonuses accelerated year one. In 2023, it's 80% bonus utilized the first year. In 2024, it's 60% allowable bonus for the first year. In 2025, it's 40% of the allowable bonus in the first year. In 2026, it's 20% allowable bonus in that first year of ownership. And in 2027, it reverts back to zero. There is no first year bonus accelerated upfront as a depreciation benefit. Now, the current administration has talked about changing this. And if this reverts back to the 2022 days, then real estate investors would be able, again, to utilize 100% bonus depreciation. So we are hoping that the current administration does revert back to the old Jobs Act bonus depreciation law. And we are excited to see the benefits of that for real estate investors, which will stimulate a lot more real estate investment due to the benefits of tax loss usage. So who benefits the most from bonus depreciation? Well, number one, real estate professionals. Number two, high income individuals. Number three, investors that utilize cost segregation studies and buy value add deals. Number four, anyone looking to offset large capital gains or passive rental income. Who is this not for? Well, it's not for house flippers. If you're buying and selling a property short term, depreciation does not help you. You are being taxed at ordinary income rates because you are considered a real estate dealer. Also, people who don't qualify for real estate professional status, this does not help you offset your W-2 or your business income. This is only going to help you offset your passive rental real estate income. So what are strategic tips for using depreciation? Well, number one, if you can utilize the losses, if you're generating a lot of rental real estate income or you're generating a large real estate capital gain, then in the same calendar year, cost segregating that property and creating large passive losses will help you offset those other income from real estate activities. Next, use the 1031 exchange when you're selling. If you have accumulated a lot of depreciation over time, then it may be best that you 1031 exchange into another property and not pay all of that tax on the recapture. Next is investing in partnerships or syndications when you can utilize depreciation losses. These will allow you to group together your rental income and your rental losses. And if you have other rental property, then the losses from your partnerships can help offset your rental income coming in from other pieces of real estate. So now that you understand what depreciation is, what bonus depreciation is, I want to dive in the next video of how to become a real estate professional in order to maximize your depreciation benefits. This one's going to be key for you to watch if you or your spouse are considering being full-time real estate investors. There are massive benefits, and I want to jump into it and show you exactly how to benefit from this real estate professional status.